Why do you always lose even when you're following all your rules? Because you're entering where the banks are already exiting. Today, you learn what order blocks are, the 2 types of order blocks, how to spot a high probability order blocks. I'll walk you through a 5-hour out trade I took using this. I will share common mistake traders make with this so you don't get trapped. What's the smart money order blocks? Are places big financial institutions like the banks have placed their buy or sell orders. Picture this as large bank orders are resting at this level in the market. For a trade to go to a certain direction in the market, it must have large buy or sell orders. There are 2 types of market participants, the banks and the retail traders. The banks, these guys, they have large orders, and me and you, we have little or no orders in the market. Our orders is just like a drop of water. Can you see that for our trades to move in a certain direction, we must learn to flow with the banks, since we know that large bank orders are at this order block right here. Go make our entry here, stop loss little bit below that order block, and we target these highs. A full take profit using order blocks. I'll show you how to map this guy out in a moment. But look at this chart here. Can you see that when price go to exactly where this order block is, it's reverse? Can you see this one too? When price would cut exactly to this particular order block, it's reverse. Order blocks are just like when you pour large amount of fuel inside your car. You will definitely get to your destination. But when you decide to pour small amount of fuel in your car, just like trading from this support and resistance zone in the market, I see that price action will end up taking you out. So this is where new traders make the mistake. How do you map out an order block correctly? So we have 2 types of order block, a bullish order block and a bearish order block. This is a bullish order block, this is a bearish order block. A bullish order block is the last bearish candle before market was started going to the upside. This is the first bearish candle, this is the second bearish candle, and this is the last bearish candle before price action moved to the upside. You map out the high of this candle and the low of this candle and use your horizontal bars to cover it up, while your bearish order block is the last bullish candle before price action started coming down, and you map out the candle as your bearish order block. So we want price action to return back to this bearish order block and we sell to the downside. This is where new traders make the mistake. Which is the order block candle in this scenario? Mistake I see traders make is pointing out this guy as their OB candle, because they think it is the last candle. If you check here, you'll see that we have multiple last candle before market started moving to the upside. But we can see that this particular candle closed above this last candle. We're gonna point this guy out as our order block. We map from the high to the low of it. To make your order block unstoppable, it must lead to a break of market structure. When we have a candle come to close a particular high, it is called a break of market structure. And this makes trading from this particular order block a valid one. In the bearish order block, when we have a candle come to close a particular low, we have a break of market structure. Look at this particular example. Most traders will map out their order block from this level like this to straight to the downside. But can you see it came and took them out? Because of after this order block was formed, it didn't make a break of market structure. But let's look at this order block right here that made a break of market structure. Selling from here, can you see how this trade went in our direction, guys? This is a 1:9 risk to reward ratio, guys. Look at this particular trade here that I sent out to my Telegram community here that gave me a 1:10 risk to reward ratio. So before I mapped out this order block right here to trade from, it gave me a break of market structure. Next to learn before you can master order block is it must be unmitigated in the market. An order block is used only once in the market. If price should come back here, we cannot sell again. Why? Remember, we deal with what large orders from the bank. These guys have already taken what large orders what from the bank. Just like when you've already exhausted what the fuel in your car, there is no fuel right here. Can you see that this particular trade that gave me a 1:10 risk reward ratio? This is the first time I'm using this particular order block in the market. Someone watching me will say that, Victor Snow, what if price doesn't return back to this order block? Price will always come back to what this order block, because order blocks are what magnet for price. How? What? Every movement in the market is caused by the banks, right? Let's use Bitcoin as an example. If Elon Musk want to buy what Bitcoin at a cheap price, but what Bitcoin is currently trading at what a 1:11,000 currently when I was making this video, what will he do is he will sell from this level down to this level, which is what $80,000. Can you see that this will now make him buy at what a cheap price? Can you now see how manipulation happens in the market? Elon Musk now have two orders running, a buy order running in profit and what a sell order running at loss here. Can you see that no matter how far Bitcoin have gone, that he will always what remanipulate price? He must always push price back so that he will be able to close this his loss in the market at what an order block zone, and he buys cheap again, and what the cycle repeats again. Can you see why you have to always what find these banks and follow them in the market? Learning something new, show some love, give me a like and subscribe. Another name for a bullish order block is called what a demand zone, and another name for what a bearish order block is called what a supply zone in the market. A demand and what a supply can interchange their roles. A demand zone can act like what a supply zone, and what a supply zone can act like what a demand zone. We'll show you in a moment. Let's look at what higher probability order blocks. Not every order block in the market works. That is why you will only trade from order blocks that don't have liquidity resting below them. Look at this example right here. USD JPY 15 minutes time frame. This is an order block candle here. Can you see we also have this break of market structure to validate this order block, and also we can see that this order block haven't been used. This order block is supposed to work, but this order block will likely fail because of what we have what another order block here with what imbalance in the market, liquidity resting below this one. Another name for imbalance is what fair value gap. Also another name for it is liquidity. We have what two types of liquidity and imbalance. We have bullish fair value gap and what bearish fair value gap. Bullish fair value gap is when there is a gap between the high of the week of the first candle and the low of the week of the third candle. This is my first candle, right? This is the high of it, this is the low of it. Point out the high of it, and we have what second, third candle, and we point out the low of the week of this third candle. Can you see, guys? There is a gap between two of them. This gap is called what a fair value gap, guys. When the banks push price towards this third candle, they couldn't return back to this high before what making a break of market structure. In fact, can you see they actually returned back only here, this low in the market, before what they made a break of market structure, leaving what a gap of what large orders that will make our what order blocks higher probability ones. We have what this imbalance here, 1 2 3, high of this first candle, low of this what third candle, and this is our order block. But also below this order block we also have what this imbalance, this order block here. The thing here is that the banks cannot buy from these two levels in the market, and that is why a setup from this order block here will make our order block higher probability ones. Let's see. And traders try to buy, they fail, and that is a full take profit for us, guys. Watch a complete order block trading course to understand this in depth. Mistake I see traders make is what marking out their fair value gap like this, 1 2 3. This is wrong. the candle of our fair value gaps in the market must be from what? Our order block candles. So we count this order block 1, but this candle 2, 3. You can now mark out the low of the week of this third candle as our fair value gap, which validates this particular order block in the market. Watch a complete order block trading course. This builds up on this particular whole video. So I'm going to be using this 5RR trade I took on USD JPY to explain this. Shout out to Onyebanji Adeboyega. He said I should make videos about interest. This is what a break of market structure. This is our order block candle right here, and this is what our fair value gap, and our order block candle haven't been used before. So map out the order block candle, guys. And is there any other block with a fair value gap resting above this candle? Look at here, this is what an order block. Can you see there is no fair value gap, guys? And this is another order block without any fair value gap right here, which makes what our order block a higher probability order block to trade from. So I'm going to be making my entry at this consequent encroachment of this order block. Stop loss above here. I'll target this range as my take profit level, giving me a 1:5 risk to reward ratio. And can you see how this returned back here? And when it goes to exactly this order block level, it's what moved down to my take profit level, giving me a 1:5 risk to reward ratio, guys. I'm fit to know, and this is trading from the soul, where I take ICT complex concepts and I break it down even a 5-year-old can understand. If you got value from this video, show some love, give me a like and subscribe. And besides, you don't want to miss a future video, always tell me a video you want to see next. It helps me make better videos. And if you're serious about learning smart money concept and stop blowing accounts, this is where you start a complete smart money trading course. I put this video and every other video together in a comprehensive way so you can understand properly. The next video in this series is the complete order block trading course. See you there right now.